Imagine a single company shattering the very ceiling of global finance, not by launching in Korea or Japan, but on Wall Street. We are talking about SK Hynix, the South Korean giant that just raised $26.5 billion in an IPO, so massive it officially broke the record set by Alibaba back in 2014. This isn't just a stock market moment. This is the financial equivalent of a first step on the moon. In this video, we are going to dissect how a memory chip maker became the largest foreign listing ever, why AI demand turned their private equity into a tidal wave, and what this surge means for your portfolio in 2026. By the end, you will understand exactly why the semiconductor sector is no longer an option. It's the only place where money is flowing right now. Let's talk about the sheer magnitude of this event. When SK Hynix announced its initial public offering in July 2026, the markets didn't just react, they erupted. The company successfully raised a staggering $26.5 billion, which stands as the largest foreign initial public offering in United States history. To put that number in perspective, this single offering surpassed Alibaba's record from 4 years prior, effectively rewriting the textbook on how non-US companies access American capital markets. They listed at $149 per American Depositary Share, an ADS, and when those shares hit the NASDAQ, they didn't just open. They surged 12.8% in their very first trading session. This performance wasn't accidental. It was a direct reflection of the global economy's shifting tectonic plates toward artificial intelligence infrastructure. While many sectors were struggling with margin compression or declining consumer spending, SK Hynix found itself at the epicenter of the AI revolution. The company is a master architect of high-bandwidth memory, or HBM, which is the critical ingredient that allows GPUs to function at speeds capable of training massive language models and running real-time simulations. Investors recognized immediately that they weren't just buying shares in a memory manufacturer. They were betting on the future backbone of every smartphone, data center, and autonomous vehicle currently being built. The speed of this capital raising highlights a new era where Asian tech giants are not only competing with American firms, but are leading the charge in defining the next decade of technology growth. Why did the money pour in so fast? The answer lies entirely in the insatiable hunger for processing power that the artificial intelligence boom has created. We are witnessing a transition from the smartphone era to the supercomputer era, and SK Hynix is sitting right at the bottleneck of this transition. As data centers expand globally to train ever larger models, they require more than just faster processors. They need memory that can talk directly to those processors without latency. That is exactly what SK Hynix provides with its advanced HBM technology. The demand has outpaced supply in ways that have never been seen before. Major chip makers like NVIDIA and AMD are desperate for this specific type of high-speed memory, creating a situation where SK Hynix holds the keys to the kingdom. When you combine this scarcity with the explosive growth trajectory of AI applications, from generative content creation to autonomous driving and advanced robotics, the valuation logic becomes irresistible. Investors realized that regardless of which specific GPU vendor they backed, they needed SK Hynix as a supplier. The $26.5 billion raised isn't just cash on hand. It is fuel for massive expansion plans. That capital will be directed into building more fabrication plants in South Korea and securing even more capacity to meet the skyrocketing orders from global tech giants. It is a perfect storm where product necessity meets market inevitability, allowing SK Hynix to secure its position as an absolute industry leader rather than just a participant. You might be asking yourself, why did this happen in the United States if the company is based in South Korea? This brings us to the fascinating intersection of geopolitics and global capital flows. In recent years, we have seen a trend where investors are increasingly diversifying their portfolios beyond traditional US-centric markets. The success of SK Hynix demonstrates that American capital has become comfortable investing in top-tier Asian technology leaders. It signals a maturing relationship between these economies, moving past the zero-sum game mindset of the early 2010s. Furthermore, looking at the broader macroeconomic picture, The US dollar remained relatively strong during this period, facilitating large-scale cross-border transactions like this IPO. However, the real story is the shift in investor confidence regarding Asian manufacturing prowess. For decades, there was a narrative that technology innovation belonged solely to Silicon Valley. SK Hynix's record-breaking debut shatters that notion by proving that Seoul can be just as vital, if not more so for certain critical components, as San Francisco. This IPO serves as a testament to the efficiency of South Korea's semiconductor supply chain and its ability to scale production faster than any other nation. It also sets a precedent for other multinational corporations looking to list in the US. SK Hynix proves that with the right product mix, specifically high-growth, essential infrastructure tech, you can bypass traditional barriers and dominate the global market. The lesson here is clear. Globalization is not dead. It has simply evolved into a more integrated, high-speed digital ecosystem where borders matter less than supply chain reliability. So, what does all this mean for your personal investment strategy? First and foremost, diversification isn't just about spreading risk across different sectors. It is about participating in the growth of economies that are driving human progress. SK Hynix offers exposure to the AI boom through a company with deep roots in Asia, allowing you to capture global growth without being tied exclusively to US domestic cycles. The company's focus on HBM capacity ensures that their earnings growth will be linked directly to the deployment of new data centers worldwide. For individual investors, this is a signal to look beyond the obvious tech giants. While everyone is watching NVIDIA or Microsoft, remembering SK Hynix provides an alternative angle on the semiconductor play. The company's ability to raise record capital means they have the runway to innovate further and solidify their moat against competitors. As we move forward into 2026 and beyond, the narrative of AI will continue to evolve, but memory remains the unsung hero of that story. By investing in SK Hynix, you are not just buying a stock ticker, you are investing in the physical infrastructure of the digital future. The fact that this IPO smashed previous records shows us that the ceiling for tech valuations is rising with every passing month. Whether you are looking at quarterly reports or long-term horizons, companies like SK Hynix represent the kind of sustainable, high-velocity growth that defines the next generation of wealth creation. We've covered a lot of ground today, from the record $26.5 billion raised to the geopolitical implications and the raw power driving AI forward. The key takeaway is simple. SK Hynix has become the new benchmark for foreign IPOs in the US, proving that the global tech economy is more connected and dynamic than ever before. If you found this breakdown helpful, make sure to hit that like button and subscribe for more deep dives into market-moving stories like this one. Drop a comment below telling me your thoughts on whether you think AI will push valuations even higher in the coming year. Thanks for watching. Stay curious and see you in the next video.